of accounting. So our topic for today is about balance sheet. So what is actually balance sheet? A balance sheet is also called the statement of financial position, which are the list that you are going to see there is your assets, the liabilities, and the owner's equity, or what we call our capital, but on a specific days. So it gives an idea of what the company is worth. So that is what we call balance sheet. So what are assets? So assets are all those things that company owns which are value to the business. Assets can also be a tangible assets like we have the manufacturing plants, computers, or cash in bank. But we also have a tangible assets like cash or goods which is for sale that can be easily be converted into cash or what we call as current assets. So, but we have other assets also like what we call fixed asset. Like example, we have the properties or equipment. Then how about this intangible assets? So those intangible assets are the one that cannot be touched or cannot be felt. So another elements again of balance sheet is we have the liabilities. It means money out. So what is the liability means again? So those are the things which the company eventually needs to pay. It means the one that we owe. Okay. What are the two types again of our liabilities? We have current liabilities which need to be paid within one accounting year. So what are the example? Maybe outstanding rent or maybe goods bought on credit or what we have a creditor. And we also have the long-term liability, which are the liabilities which will not be paid during the current accounting year. So what are the examples of our long-term liability? We have the bank loan or maybe the long-term debts. So those are examples of our long-term liability. Then how about the owner's equity or what we call capital? As we have discussed before, capital is the total money that the owner invested or the pure money that the owner invested into his business. So let's continue the elements of balance sheet. So remember, balance sheet must always be balanced with the assets and the liabilities and our capital. So assets means money in, liabilities it means money out. So it's equals to our owner's equity or our capital. So most commonly the assets are on the top and the liabilities and owner's equity or the capital is usually on the bottom. So again, let's have a look with our balance sheet format or the simple balance sheet format. So on the debit side, you're going to find all the assets. It's either fixed assets, current assets, or maybe tangible or intangible assets. And on our credit side, you are going to find our liabilities, which is our current liabilities and long-term liabilities. And also, we are going to find in our credit side as well is your owner's equity or your capital. So again, from the word balance sheet, this one should be balanced. So now, what is the key points of the day? It says that the balance sheets provide a snapshot of assets and liabilities of a company. And also, the balance sheet is one of the most important financial statements. Remember that assets, money in, minus liabilities, which is money out, is equals to our owner's equity. So again, the accounting equation, capital is equals to assets minus liability. And how are we going to find our assets? So assets is equals to capital plus liability. So that's all for today for our balance sheet topic.